What's up, guys? I'm Jamie with Property Bear, and today is November 7th. So we're looking at the weekly trends for Northeast Florida. Let's get into it. So, what we have as far as like economic news this week, today you've got consumer credit coming out, Cleveland Fed. Tomorrow you have an election. Wednesday. What's the important one? Oh, Thursday we've got CPI, which is basically going to price stuff in for the stock market. You've got initial jobless claims on Thursday. You have federal budget that I don't really care about that much this week. And a bunch of the, Kansas City, New York Fed. So, sometimes we reference the stock market in some of these reports. The thing is that a lot of people, they get information from their financial advisors as far as like when to pull money out in order to buy real estate or when to leverage that money, depending on what they can get like a margin loan account for, right? Because a lot of times you can get a margin loan on the amount, that you have in a portfolio for less than what a mortgage would cost you. So that helps or hurts real estate, right? One of the other things that I saw this week is that a lot of builders around the country are selling properties to, bulk investors, which you guys know we work with, at like a discount, like 10, 15%. Now keep in mind, that's from a national standpoint. And you have to ask yourself, why are these guys gobbling this stuff up when everybody else is saying doom and gloom? Think about it. 90% of retail traders in the stock market lose money. How do you think it works in real estate, right? Most people, right, they'll make money on accident because real estate usually appreciates over time. Even if you would have bought a house at the peak of 2007, you're still in the positive right now if you would have held on to that. And what's more is you could have probably refinanced it for lower and you're still in a great spot. But just to my point that we've been reiterating every week, the frenzy is going to come back because with the cost of money going up right now, not to mention the cost of everything else, but the cost of money has gone up, which is actually something we do control through the Fed. Builders are kind of slowing down. Even the conversations with our builders that we represent, they're saying, hey, we're going to build these a little bit slower because we know something else is coming, right? There's no need to have all of that money out, paying interest on it all at the same time. It makes sense. So what happens? You end up squeezing supply all over again, and then the second interest rates drop, which literally everyone's waiting on, the frenzy starts again. So are you in a better spot to take advantage of the market the way it looks right now, buy something, and then refinance later? Or, I don't know, follow the news, whatever. Anyways, that's just my thoughts. CPI is going to tell us a lot of, what's going to happen in December. I think a lot of people are thinking 50 basis points. It's in between 50 and 75, which is, I guess, better than 100. But CPI on Thursday will tell us which way they're going to go. If you want to know how that report comes out, just watch the SPY. If you can, bring up TradingView or something like that, any kind of stock chart, and just put it on Thursday and watch it at about 8:30 a.m. You're going to see a huge candle. And it's either going to be a green candle or a red candle, and that'll tell you what the market thinks about inflation. So let's jump into these numbers. We were thinking that we were going to have, so on the weekly chart, we're showing 381 as the peak in May. On that monthly chart, we were looking at like June, July. And remember, less inventory to pull from on a weekly basis is going to change up these numbers. And so if you guys see our like beach videos for like Jack's Beach, Ponte Vedra, stuff like that, one big sale is going to change our numbers. So based on what we were saying, with these highs, we were predicting a 10% drop from the peak, right? So that would have been $38,000 from this 381. And so what is that? I can't do that math that fast, but it's about that much, right? Well, now we're looking at, from that peak, about less than 4%. And so we're wondering, why is that happening? Well, maybe some of the stuff we're saying, and some of the other people that are not on TikTok, are being listened to, because what's happening is the amount of good inventory is non-existent. Like, it's not like all these people are in distress and houses are coming on the market. Like, we're watching the foreclosure auctions because we're trying to find, like, on our investment side, we're trying to find more deals. You know, they have to make sense, right? Are we being super picky right now? Yes, because construction's still hard. It's still hard to fill those jobs. So being picky about those deals, there's not a lot of great inventory. The best inventory on the market, you know, has already been locked up with a 3, 4, even 5% interest rate. Why are they going to sell? Like, right? Doesn't make any sense. So the best inventory that's available would be new construction or like really well done renovations. So you can see that we hit this October 1st, and then we started going back down. We're like, oh, what's going to happen? And then now we're at 366. The other thing from a seasonality standpoint is that, you know, end of the year, people tend to list less houses, so less inventory, higher prices. Some people think it's better to wait till the spring, and so they all list at the same time. Let's look at our closed sales number. And keep in mind, this is for all of Northeast Florida, like our entire MLS. So closed sales down to 380, kind of a similar number we saw September 10th, kind of a similar number we saw July 8th. So end of the year, you can kind of expect lower numbers as far as closed sales. For the past 2 or 3 years, we haven't had real seasonality. So looking year over year, last October, we have about half. 380, what's that? Would be 760. So let's call it, I mean, it's right there, about 40% drop in actual closed inventory. Keep in mind, there's also the inventory problem that it just exists as far as good inventory. Sold price per square foot, you can see that one turning upwards too. I do think everybody's kind of waiting on the same thing, which is those interest rates kind of dropping. You know, the Fed, I think it was last week or the week before, even said, you know, it's easier for us to reduce rates. You guys saw us do it, you know, when COVID hit. They dropped those rates so fast, which is what racked up this credit card bill. But they have the power to drop it, and what they see as a risk is not raising them enough versus raising them too much. So just keep that in mind. They can drop in an instant, and everybody's going to be running to refinance. Mortgage brokers will be happy again. Percentage of list price received on a weekly basis, that's also uptick. Like, everything is literally upticking, and it's a product of two things. People are realizing that the real inventory doesn't exist. A lot of the stuff you're seeing out there is probably overpriced. People were still trying to get these numbers for them, which isn't that crazy. I mean, 100 to 97.7% is 0.5% of homes from a list price standpoint. It just is what it is. Days on market. So we're still creeping up on days on market. What were we at last week? 44. I think our average for the month was like 52 last month. So it's weird that this chart looks this way. You can look back at the old video from last Monday. That was looking at the monthly charts. But yeah, so 51 days on average. And let's see, sold dollar volume. Let's look at how much active inventory we have. So yeah, so we're seeing this big climb. Remember, active inventory also includes properties that are not selling. Right, so here you had almost everything selling at this bottom right here. And then now you've got, a lot more inventory on the market. Let's look at week supply. You guys know I really don't like this. So we've got 19 weeks of inventory. Based on this, it would still say it's a seller's market. For me, not there. let's look. Pending sales. So year over year, we're down 31%, 441. Keep in mind, there's also a lot of buyers out of the market. They can't qualify with the current rates. So let's look at new listings. So it looks like new listings spiked. What is that? October 15th, about 1,200. And rates were still pretty high, but they also spiked down, right? So this isn't a crazy number to me. I would prefer looking at the monthly on this one, because if you look at the monthly for new listings, it actually has looked the same every month for about 2 or 3 years. The difference is the the absorption rate of those homes. So while new listings have pretty much stayed the same for 2 or 3 years, every month, the amount of listings that stay on the market is what changes. So that's that unsold listings number, right? So people, you guys know that I'm critical of the TikTok realtors, just because there's so much focus on social media instead of actually understanding the economics of this business. But with that said, if they're still living in a world where they're advising their customers that, hey, we can still get you May, June, July numbers from this year, those houses are going to sit because, one, the people that are out there to qualify don't exist anymore. And two, that price isn't there anymore, right? So that's a big spike in 1 week. But you can also see that in that new listings number, you can have a big spike both ways. Percentage closed above list price, that number is going down. That makes sense with our prices now down 4%. But remember, at one point they were down about, 9%? Percentage of cash sales. So we are here at 26.3%. So the thing is, with this number, is that while the percentage of cash sales has gone down, right, percentage of listings that closed with a cash offer, the amount of inventory, right, because this is not based on total closings. This is based on listings, right? So there are way more listings, but there are still way more people buying with cash, even though the chart doesn't show it exactly that way, because it's kind of a negative correlation on there. The thing is I've talked about this a few weeks ago, but what ends up happening is it's similar to like a stock chart or something like that, where you have like a resistance level or a support level. These cash investors that are the institutions, the hedge funds, they're looking for a certain yield. When prices come down 4%, 6%, 5%, whatever the number is, and rents are not following that same trend, what ends up happening is they get back in the market a little heavier than the retail buyer does. And they're usually earlier because they're looking at this stuff and not social media, right? They're not really paying so much attention to the same things that the regular consumer is, because for them, they're looking at pure yields. And honestly, based on the numbers that they pay for houses, they can afford better yields than what I look for, frankly. And then let's see. Okay, so that's all we've got for there. We're the other videos for this week that we've got is basically why a recession would be good for the Northeast Florida real estate market. We will also do basically these trends for the beaches. Jax Beach, Atlantic Beach, Neptune Beach, Ponte Beach. We'll split them all up. And keep in mind that this is for all of Northeast Florida. Traditionally, we do Clay, Duval, and St. John's. We might get back to that. I'm going to look at the charts again, but I like, for those ones, I like having more volume that I can kind of lean on for the data, right? Because I'll give you an example. We were looking at Neptune Beach last week, and there's like 90 houses that sold this year or something, like some small number. So I think it was, I don't even know the monthly number on that, but you have one sale that's really high or really low, and it creates this massive like volatility from a chart standpoint. It looks like prices are going crazy high or crazy low, when it's just the sample size is too small. So hope that's helpful. If you are a buyer, what does this mean? It means you have some options. If you are on the fence, the choice is about to be made for you, frankly, from a buyer standpoint. If you're on the fence and you're on the threshold of qualifying, I would look at securing a lease, because if you're not 100% confident about jumping into the housing market, you're going to get pushed out by rates, one, or two, by the time, if our prediction is right and you've got end of Q2, start of Q3 with lower rates, everyone's going to see that. They're already prepared. They're in the driver's seat. And you're in a lease and you're only a quarter in, it's going to be hard to break that lease. You can break it. We see it all the time. For a good enough deal, you definitely do it. Or if you find your dream house, like that's what you want, you do it. But someone who doesn't have to do that is going to be in a better position if they lined everything up appropriately. And there's also the rent to own program with Breeze Homes. Check that out. Kind of gives you the flexibility of both. And if you're a seller, you're still getting, from a historical standpoint, you're still getting really good prices for homes. It's just taking a lot longer. You actually need a good realtor to get it sold, versus, I don't know, your uncle's brother's sister's cousin, right? You need someone that knows what they're doing. We're seeing it, especially with our flips, that the knowledge that Carrie and the rest of the retail team have, like, is actually coming into play when getting these houses sold. And some of the responses we're seeing from like agents on the other side of those transactions were like, this should not be happening. We know they got licensed in like the last 2 years, which isn't a bad thing, but they haven't gotten the right training, right? So they've only seen one type of market and no one's telling them, hey guys, this is changing. But with that said, I think National Association of Realtors is expecting a 40% drop-off of licensed agents from a national standpoint. So let that sink in. I hope you got with a good agent if you did buy a house in the last few years. And if you need someone to clean up, give our retail team a call. Enjoy your week, and I hope this was helpful.